Last week, we shared a podcast titled Facts, Framework, and Approach, a conversation designed to help bring clarity to how we view markets, the economy, and your financial plan. This week, we're following up on that theme, but with a slightly narrower focus. Rather than walking through a broad economic summary, we're zooming in on a couple of recent headlines. These are the stories grabbing attention. Tariffs, market volatility, they're the kind of updates that can feel both urgent and intimidating. Our goal? To guide you through these next stories using facts, frame, and an approach model. We'll do this to not only give our perspective on recent big stories, but also to share how we apply the model to new information. We believe this model is portable and can apply to a variety of scenarios. Recall from last week that our framework has 4 anchors. First, time horizon. Time in the market is more effective than timing the market. Real returns, outpacing inflation. Diversification, preparing for multiple scenarios. And lastly, compounding of assets, growth on growth. All right, now let's get into the headlines. News story number 1. U.S. stocks soar as Washington pauses most tariffs. The facts. On April 2nd, the administration introduced sweeping tariffs on a wide range of imported goods. 1 week later, they announced a 90-day tariff pause for many trade partners. After declining nearly 20%, the stock market reacted strongly to the upside, posting one of the highest single-day records, up 9.5%. Trade policy is one of many levers that can affect market dynamics, but it doesn't act in isolation. Tariffs can create winners and losers. It's a reminder that markets don't move uniformly. Diversification is a discipline that helps us hold steady. When one part of the portfolio is strained, another may benefit. Another parallel framework this news story touches on is time in the market. Attempting to time in and out of the market can impair long-term results. For example, missing just the 10 best days over the past 20 years would have reduced a 10% annualized return to just 6%. We're talking about just 10 of the roughly 5,000 trading days over the last 20 years. The approach. Maintain a strategic allocation that includes broad global exposure, fixed income assets that may cushion volatility, and a defined assured income segment to meet near-term spending needs. News story number 2. Market volatility remains amid economic uncertainty. Stock markets have seen increased daily price swings, with the S&P 500 now down around 10% year to date. In certain asset types, volatility is expected, especially in the short term. Markets are uncertain. Historical data shows that a 10% decline occurs about once every year, while a larger 20% decline, sometimes referred to as a bear market, tends to occur about once every 3 years. Our time horizon and compounding frameworks remind us that investing through turbulence is part of achieving long-term growth. Let's take a look at another chart. What it's showing is incredibly powerful. It highlights the S&P 500's forward returns after the 10 worst single-day losses since 1950. What's remarkable is that despite these steep, often panic-inducing drops, the market generally rewarded those who stayed invested. Our approach is to stay diversified by asset class, but also by time horizon. Stage growth assets in longer-term buckets and keep 2 to 3 years of assured income set aside for near-term income needs. This setup isn't just strategic, it's psychological, helping reduce the impulse to make emotional decisions based on short-term market performance. Ultimately, we don't try to guess where the market is going in the short term. We focus on building a strategy that is enduring, one designed to grow your wealth in real terms over time. Markets will continue to move, policies will shift, and yet the underlying principles we use to interpret these moments remain steady. That's the value of a real framework, not just to understand what's happening today, but to stay grounded when the next story breaks. At Vector, our role is to help you build and maintain a plan that endures, one rooted in thoughtful frameworks, intentional action, and a clear understanding of what matters most, your goals. Thanks for following along, and as always, we're here to help.
Hey, thanks for listening to our podcast. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment